Hi, let's look at Elrond, ticker symbol EGLD, currently at $175.82. We are looking at market rank 45, so Elrond has a market cap of approximately 3.5 billion. And what we will do is not only look at the US dollar chart of Elrond, we will, as usual, compare the altcoin to Bitcoin. We will also look at the valuation in Ethereum. So this is now the Elrond price divided by the Ethereum price. Then we will look at relative performance to Cardano, so the Elrond price divided by the ADA price. And last but not least, the relative chart to Solana. Now this altcoin is quite interesting when you look at the US dollar chart. The trading volume recently is not particularly high. So at the beginning of the year, there was quite a bit of action. We had a rally of like 25x, 30x, something like that. And now we seem to be consolidating in some kind of trading range, going somewhat sideways while trading volume is pretty flat. Now, I don't go into the details of US dollar charts too much because there is a lot of general crypto sentiment baked into those charts. For example, we can see that the recent rally here, this 190% rally, it started since the 20th of July. And we can see this kind of rally in basically any chart since the 20th of July. Bitcoin went up since the 20th of July. Ethereum went up. And Cardano is no different. So there is a lot of correlation between different cryptocurrencies. The reason though why you go down this list of cryptocurrencies where the market cap is decreasing all the way down to Elrond at place 45 is because you want to get outperformance, right? You don't want just general crypto exposure. Otherwise you could simply stick with Bitcoin and Ethereum, maybe Cardano. But the reason why you're looking beyond assets of like 1 trillion in market cap, and the reason why you consider something that has rather 3.5 billion of market cap is because of outperformance. So really, the US dollar chart doesn't really matter that much because it just tells you the performance versus fiat. What you really want to know is how much does the additional risk of investing in something that much smaller than Bitcoin or Ethereum, how much does that risk actually get rewarded in terms of performance? And so let's look at relative performance. Let's look at Elrond in Bitcoin. Again, we can see some kind of sidewards trading range. The charts actually, they don't look that different if we toggle back and forth. Only this underperformance in Q3 of last year was more significant versus Bitcoin, right? 76% underperformance in US dollar terms. It doesn't look that bad. We are only looking at around 60% or so. So the picture itself doesn't change too much. We seem to be relatively high on this trading range, right? We could even draw a resistance over here. Same goes for the Bitcoin chart. And so the risk versus the potential reward is not too favorable right now if we stay in this range. But really, let's look at the valuation versus Ethereum. I like the Ethereum charts more because Ethereum is more correlated with the altcoins. If you look at the correlation of daily returns of Ethereum versus various altcoins versus Bitcoin versus various altcoins, you see that Ethereum tracks those altcoins much more. The performances are much more similar. And I think that's down to the investors also being quite different. If you look at Bitcoin, most people that invest into Bitcoin are in it for the very long term, right? They might dollar cost average in, buy a certain amount every month, and then just hold it for many years, maybe as a portfolio diversifier because Bitcoin is not so much correlated with, say, stocks or with property. So you've got a nice addition to your overall traditional portfolio with Bitcoin. And so you just buy in and you hold it for the long term. With Ethereum, that's a little bit different because you've got this project risk here, right? Will the gas fees get lowered over time? Will the proof of stake properly work and will it be implemented properly? Will other projects with smart contract functionality, such as Cardano, overtake Ethereum? You don't have these kind of discussions with Bitcoin, right? You don't have this competitive, innovation-driven price movement. Bitcoin is really the store of value. Ethereum is a bet on the technology. And so when you bet on technology, you might as well compare two technologies with smart contract functionality. So Ethereum and Elrond. And that's this chart over here. The Elrond price divided by the Ethereum price. And looking at that, we can see the assets, they pretty much move in tandem. We are in the middle of that trading range. Elrond is not particularly cheap. It's not particularly expensive. It's in the middle. The problem though is that Elrond tends to be more speculative, right? It tends to be riskier simply because its market cap is way lower. If you invest into Elrond, you buy something with a market dominance of 0 0.15%. So 0.15% of all of crypto is Elrond. If you compare that with Ethereum, more than 20% of all of crypto is Ethereum. So Ethereum is way larger, right? And that's not just in terms of market cap, that's also in terms of adoption, usage, DEXs, DeFi, NFTs. Elrond's community is way smaller. And so there's more risk here, right? Will it get adopted as much as Ethereum? Will it survive? And so over the long term, you need to get an outperformance versus Ethereum. You take on more risk, thus you should get more performance, right? It doesn't make sense to take more risk and just get the same performance. But so far, the additional risk of getting into Elrond has not been compensated in comparison to Ethereum. Now this problem gets even more pronounced when we compare Elrond to, say, Cardano. Cardano obviously has had its run, but if we look at Cardano's dominance, we are looking at 4.15%. So Cardano, in terms of market cap, is larger than Elrond. And Elrond is underperforming Cardano relatively consistently, right? This underperformance is 68% since September of last year. And there is obviously quite a bit of volatility here. And nobody knows for sure if this will just jump back up, gain another 200% and completely crush Cardano, right? You might argue there's some kind of floor over here and certain resistances over here. But the question really is, how likely is it that over the long term, Elrond will outperform Cardano? Because Cardano is way larger, Elrond is smaller, and so Elrond should over the long term actually outperform, not just trade sideways over here, right? It should outperform Cardano. And so how likely is it that we're going to get this movement north of, say, 200 or 400 or 700%, where we really see an outperformance? It's definitely a stretch. I'm not saying this can't happen. Everything is possible in crypto, but it's just something to consider. To me, this looks more like a long-term outperformance of Cardano versus Elrond. And with Solana, this gets even one step further. Solana is smaller than Cardano. It outperforms Cardano as it should. So Solana's performance is very positive, is very impressive. And thus the underperformance of Elrond is just pretty incredible. This is a 77% underperformance. If we look at the top, right, top to bottom, 95% underperformance. So if you, in February of this year, decided to invest in Solana instead of in Elrond, you would have now 20 times more money. That's what this movement here means. Now let's go back to the Ethereum chart. You can of course still attempt to trade this, to time those ups and downs, because obviously they are pretty significant. This is a 200% move. If you're not just holding over many months and many years, but you're trying to make short-term trades, there are certain approaches you can take. One approach, for example, is adjusting the moving average length. So over here in red, we've got a moving average. And what we can do now is we can work with the assumption that we are in the market whenever the price is above the moving average, and we are outside of the market whenever the price is below the moving average. So we don't take this huge downturn over here, but we are in the market whenever the price goes up. But in order for this to work, you need to have the correct length for the moving average. And so we try now to eliminate those wrong signals over here where we get in and out of the market, incur a lot of costs, and don't really know if we are in bull or bear territory. Because here we would have sold, but then we shoot up again, right? So we increase the duration of the moving average until we eliminate most of those wrong signals. So we don't have a wrong signal over here. We don't have it over here. We would have been in the market for this rally. We would have been outside of the market for this downturn. Here we've got bad buying signals, but we can simply increase this a bit further. Now we've got eliminated those as well. And so with the 85-day moving average, we've got a pretty good measure. We would have been, in theory, if we knew that moving average beforehand, in the market for a roughly 260% gain. We would have avoided a 50% loss, and now we would be again in the market, currently with 15% in the positive. Note, this is the relative chart to Ethereum, right? It does make sense to look at the relative valuation, not at the US dollar chart, because otherwise you could simply be in Ethereum. And so if you are interested in getting into Elrond, it looks like short term we are relatively low, right? If you regard this as a short-term trading range somewhat. So if you were to trade this, you could kind of extend this moving average somewhat randomly actually. So this is how it would look like. And so you could be in Elrond right now simply because it does have positive momentum versus Ethereum, and you would live with a potential downside of say around 8 or 9%. That's where you could set the stop loss. The intraday movements are not too crazy either, right? We don't have huge spikes to the downside or to the upside. So you can really set a stop loss over here, and then you've got a potential upside that's more or less unlimited, right? You just stay in the market as long as we are above this 85-day moving average. That's, I think, how I would try to time this, simply to avoid being in the market when the price just cuts in half, relatively speaking. Take the potential gain without being in the market for a potential down movement. If you enjoyed this video, please give this a like. YouTube will then help to grow the channel. And if you haven't yet, you can subscribe as well. I publish a video every single day. Last but not least, we've got a Telegram channel. It's completely spam free. We are almost 500 people over there. We enjoy discussing crypto over there. We talk about altcoins. We talk about the general state of the market. Would be great to see you there as well. You can find us either by clicking the link in the video description or simply by searching for Bitcoin Strategy Channel within the Telegram app. See you next time. Bye bye.